So, ladies and gentlemen, welcome to What Will Trump Do This Weekend? Actually, that would be a good series. Now, let's get serious. We had another exciting week. You can see the market closed up pretty red on this Friday. Welcome to the weekend edition of Wealth Time. I'm Noble PM, bringing you the top economic news, and we're going to go over our portfolio, what we bought, what we sold, what we traded, and of course, why we did it. And then we're going to do another risk analysis for the upcoming week, as we do at the end of each episode. So let's talk about the risk analysis report from the last week. We said that our risk was pretty high for this week, and we saw a lot of volatility. So we can see that we had a really volatile week right here. It jumped, it fell down once again, but all in all, the markets were not happy. So I was right. There was a couple of risky days in the market, especially Monday, because Trump did another. You know what? I have here a couple of notes for the week, for the happenings of the previous week. So let's go over them. Let's see what the last week happened and how it influenced the market, and also how it influenced my trading in my portfolio. So we're going to talk about the week from the 2nd to the 8th of February, which was basically the second week of February, kind of. Yeah, started with the 2nd, so it actually was the first week of February. It was a whirlwind of a global economy and the stock market, because positive development emerged at the middle of the week, and there we saw a concern keeping investors on their toes due to a couple of facts. So let's just go over the facts, which was tariffs, then mixed global market performance, Fed interest rate cuts outlook, and Amazon reported and Google also reported earnings. We had let's go to our earnings hub here. So we had a lot of the big tech companies reporting earnings also the week before. But we had Palantir reporting earnings. They reported amazing earnings. The stock is right now up for the entire week over 40%. Jesus. Full disclosure, I do own a bit of Palantir stock. And as always, if you see here is not financial advice, please consult a financial advisor when you're considering buying, selling stock, or anything. Also, there's a full disclaimer down in the video description. So Palantir, amazing earnings. They're so massively overpriced. They're 100 something times future sales. Just think about it. You have to go roughly 30 years into the future in order for the price to come up to the earnings. Okay, so we also had PayPal reporting earnings, Disney, Alphabet reporting earnings. They fell. AMD also reported earnings. I'm a big AMD holder. It's a big chunk in my portfolio, and I am massively down on the position, but that's life. Mistakes were made. Amazon also reported earnings, and they went, well, not that bad as Google, not Apple, but they reported a good earnings, better than expected earnings, but their stock fall roughly here 4%, something like that. So they're down, for the week, they're down roughly 3.5%. They also closed, let's just say they're down 3.5%. Now, investors focused on the company's renewed forecast, but it kind of fell short of expectation, because in nowadays, everything that is not amazing is bad. So if you're not reporting amazing earnings, then you have bad earnings. Because Google had the same thing. Google reported good earnings, good revenue growth, and still they fell. So that's that. We're going to come back to Google a bit later on. Also, home builders took a hit because their stocks experienced a significant loss, with big companies like D.R. Horton and Lennar sinking 5% and 4.2% in the market, because the prospect of fewer interest rate cuts by the Fed has expected rise their concerns about potential higher mortgage rates. So this change is impacted in the housing market outlook. One interesting news was about Expedia Group. Now, after they reported earnings, they also reported that they see significant confidence in the travel industry. They rose their dividend, and they also reported really, really good earnings. Now, the stock jumped roughly 70% on the report. As you can see here, it's almost overbought, so I wouldn't try buying here Expedia Group. It's just too risky. Okay, now let's get into our portfolio. Let's see what we bought, what we sold, why we did it. Let's first of all start with trades. None. Actually, I did do a couple of. So trades I did on UPS and on Hershey's. Both of them fell. So UPS fell on the earnings report, due to the fact that they reported. Let me just show you with UPS. But it was really short trades, and also this looks much better now. I was considering that UPS could go even further down. It's kind of trying here to consolidate, but the UPS does this a couple of times. So it went down, for example, here it went down, it consolidated, and it went down again. It stayed there for roughly a month, then went up, and then it fell down again. So UPS, United Parcel Services, as you can see here, has a really bad 3 years behind them. I would say, let me make this chart a bit larger. So we're looking now at from 2013, whatever. So let's just take it like this. 2009, 2008, 2009, they had a comeback, and then they kind of went nowhere from 2017 to 2020, and then they jumped to the pandemic, and then they went down again, and roughly in 4 years you went basically nowhere. Now they have a great dividend, and they do increase the dividend, but only for the 5.75%, only buying the stock for its dividend, with, as you can see here, basically no growth. I would strongly be against it. I'm not going to hold this stock. I did a small trade on it. Was actually expecting to be a much better trade, but well, things didn't go my way. On the other hand, Hershey's, the Hershey company, sorry, there we go, ticker symbol HSY, well, they did have a comeback, and then I sold it just like that. Now let's take a look at this stock. Let's think about it just a second. Hershey is a really old company, over 100 years. It's not that long on the stock market. It's, wow, from 1970. Yes, it is on the stock market. So a couple of things wrong with Hershey. They're only US based. Now that's not wrong, but it cannot grow. So they're pretty much outgrown. They also refused a merger or buyout, and they are currently having, I wouldn't say problems, but uncertainty due to the GLP-1 drugs. This is the weight loss drugs. Now, will this stock ever recover? I don't know. Let's make something easier. Is it a good product? Yes, but that doesn't mean that stock and product should be at the same level. So this is why I did just a small trade in Hershey, took my profits, and went on. Okay, so that's it for, let me just check once again. I think that's it for trades. Yeah, because anything else we're going to talk about right now. So let's go back to my portfolio. Let's do here close positions. One pretty major position that I closed is Adobe. So I don't see Adobe going anywhere fast. I thought to myself that was always a trade for me. I also sold it for a tinge of a loss, but I just cannot see Adobe going anywhere from here. They kind of saturated the market. They're not coming out with any new products. The purchase of Canva is a platform where you can do image editing, video editing, so far. So it's exceptionally good platform. Went nowhere, and I think Canva could beat them. Simple as that. They don't have video editing like Adobe has with Adobe Premiere Pro. Also photo editing with, I forgot what the software is called. Photoshop, of course. Photoshop. Jesus, how can I forget that? I used Photoshop for many years. Yes. So no, Adobe for me is dead money. So I will not, hopefully I will not make this mistake again. Learn my lesson. I cannot see Adobe growing from here. They will report earnings. Maybe I'm wrong. Who knows? As always, this is not financial advice, people. I am not a financial advisor. I cannot tell you when or how the stocks will perform. So they are due to report earning on March the 13th. We'll see what the stock does until then. Okay, so that's it. That's the only position that I completely closed. Now let's go to reduce positions, because I did reduce a couple of them. First things first, ORCL, ticker symbol ORCL. I reduced my position to 0.72% of my portfolio. Really small position. Well, let's take a closer look here at ORCL. Now, they are currently in a MACD buy signal. The RSI is just perfectly positioned here for growth. Maybe they're going to go upwards, but if Trump again says something over the weekend, this stock is going to go down again. Now, whenever that money, that 500 trillion or whatever is going to be spent, I don't know. Also, I'm still waiting on what will happen to TikTok, one of their biggest clients. So yeah, I reduced my position in ORCL. If they have a massive pullback, I would consider adding back to it. Next up, Palantir. As I said, Palantir reported earnings. They beat everywhere. They massively beat. That's why also the stock is massively up. Now, we could see it from here. Also, I took a couple of profits. That's why I reduced my position. So Palantir, PLTR, currently at the 2.43% position in my portfolio. If this doubles, I will reduce it once more. If it comes back, I would consider adding to it, but it depends at which level and what the environment is in that current moment. I would consider adding back to it. Next up is Palo Alto Network. Also did a little bit of trade there. I reduced the position once more. So Palo Alto Network currently a 0.1% of my portfolio is nothing. It's $156. I'm just watching it. It's not added to my watch list. I'm watching it. I'm waiting for a pullback. If it has a pullback, I would consider adding back to it. For now, Palo Alto Network, ticker symbol PNW, massively reduced in my portfolio. Next up, Constellation Energy. Again, I did a couple of trades. So right now, actually, Constellation Energy is looking interesting. MACD sell signal triggered here. It's on a sell spree. How long can this last? I don't know. The RSI is pretty almost at its middle, so it's at 56 currently. Looking good. If this has a pullback, I would definitely consider adding back to it, but only as a trade. So right now, Constellation Energy, ticker symbol CEG, with a 2.02% in my portfolio. Reduced it to this 2.02%. Consider adding back to it if it has a major pullback. Okay, so that's it for positions that I reduced. Now let's go to positions that I added to. Of course, my cash went up with all the selling. My cash position is currently at 8.95% on my portfolio. Want to increase it till the end of April to between 15 and 20% of my portfolio. That's a lot, and that's also signaling that I'm expecting something to happen, but who knows if that comes to fruition. Now, next up, Nvidia. Once again, Nvidia on its pullback. I add a bit to my position. Since then, Nvidia is trying to trigger a buy signal here. So it was not a bit oversold, not massively oversold on an RSI. This is where I added back to it, increasing my Nvidia position to 4.36% of my portfolio. Nvidia with the ticker symbol NVDA on a trying to trigger here a buy signal. If nothing happens over the weekend once more, this is the weekend surprise. And if it does, if it goes up to where I already have a sell signal, a limit sell placed in my portfolio. So if it goes up there, I'm considering to selling Nvidia. Why is that? Is Nvidia not the best company? Yes, it is. But I think Nvidia is going to consolidate this entire year with the massive uncertainty is now out in the market due to the 2 weeks back DeepSeek. So definitely watch up my deep dive into DeepSeek video there, which does signal that the innovation that is taking place in the AI environment is changing the way we need energy. And that is also why I'm constantly adding and reducing from Constellation Energy. It has a massive boom that I'm going to reduce from it again. If it has a massive sell-off, then I'm going to add just a tinge to it. If the sell-off is not triggered from factors like AI is dead, we don't need any energy anymore. Okay. Now, Constellation Energy is one of the nuclear energy providers, and they do have a massive contract with Microsoft. But Microsoft's CEO said that he's good for his 80 billion, kind of signaling that that's all they're investing for now. Let's see what it does. Let's see what AI really does. Let's see the ROI, the return on investment on AI. Okay, last new positions. I dollar cost average into the S&P. I massively reduced my dollar cost averaging, by the way. The portion is minimum right now. It's only 100 euros a week. And then I added Google. So a little bit of mistake that I made here with Google. As you can see, I'm at my Google currently down red in my portfolio, minus 6.7%. Now, Google, this is Google A shares, ticker symbol GOOGL, currently at a 4.15% of my portfolio. Added 2 times, once before earnings and once after earnings, and then a little bit here on Friday once more. Google currently on a MACD sell signal on an RSI. It is not oversold, but it is It's getting there. It has still more room to go. If it went massively over, if it goes massively oversold, I would consider adding back to it. Also, the way my brokerage works is first in, first out. What does this mean? The first shares that I buy will be the first shares that I sell when I'm selling shares. So if it goes up, I'm considering selling my shares that I bought, the first shares that I bought, reducing my buying price to roughly 180 from 192 euros a share. I can do the conversion to dollars. It's basically almost the same. Okay, so although Google had pretty good results, although their cloud services grew with 40% or something year to year, it has really good revenue from YouTube. Still, the problem was it was an all-time high. That's the only explanation I can find here. And of course, they didn't report amazing results. They just reported good results. But that's the stock market for you. So was it a mistake buying it before their earnings call? Yes, in hindsight. Who would know? Well, maybe I should have been more cautious with Google, maybe waited after the results, then considering adding to it or not. But yes, lessons learned once more. Although I consider Google, even if I leave my position here for the next 5 years, I consider Google a extraordinarily good investment, not financial advice. Okay, that's it for my positions in my portfolio. Now let's do a risk meter. By the way, I added a heat map to my stock DOM, my wealth DOM application here, and this is the heat map from the closing bell. So this is from Friday. I'm going to update each and every trading day from within the trading hours. So this is pretty much live. Now you can see there was a massive red all across the board. This is how excepting Uber, because why not? Okay, now let's do a risk assessment for the upcoming week. Let's open up our S&P futures here. Currently, it wants to trigger a sell signal. So on a MACD, I would say that the risk is higher than lower for a negative week next week. Who knows? On an RSI, I would say it's a medium risk at currently 50.54. Now the stock market is in this range bound, bounded to this range. And it's a medium level, so it could go down, it could go up. If it goes up, there's not much room here for it. First of all, has to be massively oversold in order to massively go up. So I would say S&P 500, kind of in the medium range of risk for the next week. Also, let's take a look at economic events for the next week. Whoops, far. So we're talking about the week from the 10th to the 16th of February. So on Monday, we have nothing. So maybe we're going to have a good day. On Tuesday, we have the Fed Chair Powell testimony before Congress. Also, I won't say that's going to affect markets that much. He's basically going to repeat whatever he said in his last conference, the FOMC meeting. But on Wednesday, we have the inflation rate report. We have core inflation month-to-month and year-to-year. Again, we have a Fed Chair Powell testimony. Then on Tuesday, so that's on Wednesday. Then on Tuesday, we have the PPI report. And on Friday, we have retail sales. Now, because of everything that happened with the Trump trade, the rising of interest, the maintenance of interest rates, the tariffs wars, nothing really came to fruition with the tariffs. So I would still consider economic events to be on a medium risk range. Also, we have a couple of companies still reporting earnings next week, so we're not done with the reports, but kind of 80% of the major companies already reporting it. So we still have McDonald's as a major company, Coca-Cola, CVS. I'm a major holder of CVS, Kraft Heinz, Cisco Systems, Robinhood. Deere reporting earnings, GE also reporting earnings, GE Healthcare, Duke reporting earnings, Honda, Sony. So Palo Alto Networks, check it out. They're reporting on Tuesday. Brookfield, this is a really important one. I'm looking for Brookfield to have a major pullback. Want to add to Brookfield. Amazing company. Still didn't do my deep dive into Brookfield. We'll do it one day, but I'm majorly time constrained right now. Unix reporting earnings. Okay, so the main thing to watch for here, that the companies that already reported earnings, well, their buyback window just opened. So next week is the middle. I don't think next week we were going to see low buybacks. So that's going to add a bit of medium risk to the market. And this is going to constantly grow with the end of February, because there's when companies will have finished reporting their earnings and they can buy back their shares. So they're out of their blackout window. Okay, so there's your risk for the next week. As always, there is no risk. There's also no 100% risk. There's always some kind of risk in the market, and it basically depends on how you're positioned. Now, my stock portfolio actually grew over the last week. Although I have massive pullbacks in Nvidia, I made a bad choice in Google, and I sold negatively Adobe. Still, Nvidia didn't perform that well, down on that position. Novo Nordisk is down, although it grew a little bit. So I have a lot of positions that are massively down, but a very good diversified portfolio with Procter & Gamble and bonds doing their stuff. You can see here, we show you my biggest position is still US Treasury, and this is basically the TLT, but I can't buy the TLT on the stock exchange that I'm on. And it's not overbought. It still has room to go. So as soon as trouble hit on the markets, this went up, up, up. Okay, ladies and gentlemen, thank you so much for watching. Don't forget to share, like, and subscribe. Please be so kind and subscribe. Also, like this video. It helps with the algorithm. Just going to push my video out to more viewers if you enjoyed it, of course. So with this being said, wish you a productive week. Catch you next time. Stay safe out there. Bye-bye. Bye-bye.